What's up, everyone? Welcome to almost the end of 2024. I'm Chad Anderson. He's Zach Jones. This is More Than Mortgage. We have made it a lap around the sun. Zachary, this is episode 53. So this is like
53.
season 2, episode 1 at this point, right?
Season 2.
Yeah, there we go. All right, so today we're going to kick things off. Since we're at the end of the year, I know some of you don't do this until April 14th, or you delay it until October 14th, and that's you're self-employed and you file your income tax returns. And income tax returns, self-employed borrowers, this is a cliche. This is a stereotype.
Mm-hmm.
Everybody's, they're self-employed. I don't want to do this loan, or they're self-employed. And then on the buyer side, they're going, I'm self-employed. I keep getting told no by everybody. And there's not always truth to that. There are other opportunities and options available. We'll end the video with one that's very highly popular. But Zach, get us started. Pretty standard. People trying to avoid paying a large tax bill is the key, which we would all love.
Yep.
But at the same time, when you do that, a lot of times you're killing yourself when trying to qualify for a mortgage.
Everybody who's self-employed, that's one of the biggest privileges, I think, of being self-employed or having your own business, is that you do get to write off a lot of expenses, business income, etc. And so I do it as much as I possibly can, but it's not always the friendliest situation when you go to the mortgage guy's office to make an application, because if you had gross sales of $200,000, but it cost you $150,000 to make those sales, then you're showing $50,000 worth of income. And that's not very strong for buying a house these days if you're wanting to have your $200,000 income house. So very important too to underscore this myth that's pervasive in the real estate industry and among entrepreneurs or self-employed people, which is, I'm self-employed, I can't get a mortgage, I can't qualify for a mortgage. And people get kind of in that rut. I run into them all the time. Say, well, I tried to get a mortgage 7 years ago when I started my business, and it was just terrible. I couldn't qualify for anything. That was 7 years ago. So let's take a look at it again. And I typically, it's my personal experience that I don't usually have a lot of problems qualifying people who've been in business for a little while and just kind of meet those standard criteria. And they're building their business and showing income and that sort of thing. But we do have some products for those folks who are not showing very much income at all.
And here's the key as to why we're telling you in the second half of December about your tax returns, because you're going to go file here in the next few months or at some point next year. When you're filing, if you are looking at refinancing, if you're looking at taking cash out, if you're looking at doing a HELOC, if you're looking at purchasing a new home or an investment property, you may want to know how to qualify and what to write off, what not to write off. Now, we're not sitting here advising you to commit mortgage fraud and lie about your income and lie about your expenses. But what we are telling you is that this is going to give you an idea of whether or not you qualify. And you can actually, people say, oh, well, you can't coach them up. That's BS, because the calculators are public knowledge. You can literally Google Fannie Mae 1084 cash workflow sheet, and that is what is used to calculate income. Freddie Mac has a little bit different FHA, but they all come out to the same. Like, they're all pretty much the exact same thing, just maybe in their own verbiage or their own exact like little nuances here or there. Overall, it's pretty much the same. So you can get that information. Zach and I have done this for so long and have done so many self-employed borrowers. I feel like we're on Name That Tune, Zach. I could do this in under 2 minutes if I had your tax returns, right? Like, I could literally sit it down and go, in under 2 minutes, I could tell you how much income you have based on the prior year's returns. So if you DM us, shoot us a message, drop us a comment. I always say, like, subscribe, all this stuff, hit the bell, everything on the social media channels, because we can do that literally and tell you whether or not you qualify. And the other great thing is there are programs where, hey, if last year's return wasn't good, well, we only need 1 year return in order to qualify. You don't always have to have 2. Sometimes it's just 1. So any other, before we get to like the little bonus piece of how you can qualify, as far as like, a way to something we've left out?
Yeah, I would just say that in those situations where you're looking at filing taxes this year, if you are in the qualifying category for that 1 year return, then it may be very well worth your time not to take as many deductions this year and boost that income up and kind of get you over the hump to qualify. And then next year, you can go back to your standard, the way that you've structured your taxes in prior years, and take full deductions on everything that's legal to take them on. And it's easy to kind of make sense out of that for me mathematically to get into a good, straight conventional loan and not get out of the box a little bit, because you pay a little bit more for those loans that have greater flexibility for the underwriting guidelines. So it really is, again, taking a very close look at it, not guessing or falling prey to the mythology or, what your Uncle Larry told you 3 years ago.
I literally have an Uncle Larry, by the way. That's fantastic.
How is he with math? Is he kind of Uncle Larry?
If you knew Uncle Larry, I'd say he's doing just fine. He's
okay. All right. Uncle Billy. Uncle Billy.
Okay. Billy, on the other hand, Billy sits at a separate table for Christmas than Larry does.
Billy goes to the kiddie table because that's where he's well.
There it is. Yes. Now you got it. All right. We're tracking now. And the other thing too, sometimes I'll talk with people and I'll say, hey, look, this year is still, it's not going to be enough. And they'll go and they will just write off a ton because they kind of give up hope. It's like, hey, you got to start somewhere. If you're going to stay self-employed, you can't just throw this year out the window because you don't qualify. You've got to build the history of the returns, because in that event that we do need a 2-year qualification, well, guess what? If you write it all off this year, we're now just that much further away from you qualifying for something else. So keep that in mind. The other thing that's big, and people will ask me this, and guys, this is really like getting out of the gray and diving headfirst into the black. Don't give me one set of tax returns and then go get your house and then go amend your returns and make it a whole lot less and get your tax bill back. Look, here's the catch, or the thing on that, not a catch, but a thing. I'll never know if you do it, but I'm telling you, you're dancing with the devil.
Yeah.
If you do that. Okay. Like,
if you
I know that's out there. It gets talked about. It's out there. If you give me one set of returns and file, buy a home, and then amend, you're going to be sleeping with one eye open when it comes to regulators or audits or the IRS or whatever the case may be. You will be.
Let me just be conspiratorial here for a minute. You've got the IRS. You amend your returns to pay less in taxes. That flags your IRS file. And let's say that Fannie Mae or Freddie Mac or Federal Housing Administration goes to the IRS and says, hey, buddy, we're just kind of doing a little internal audit. Will you show me your amended returns? We want a list of everybody has amended returns to check them against our database to see if anybody who amended those returns happened to buy a house last year and we originated a new loan for them. When that happens, and this is revenue, these are revenue generating activities for government entities because there are fines involved.
Yes.
That's all I'm going to say.
There are fines, and if you get too blatant, there's jail time involved potentially in some of those as well.
They want your fines, though.
Not to put a damper, not to put a damper on the Christmas spirit here, but at the same time, we want to be on the up and up when it comes to all of this. Last thing, little bonus tip. I've done these. I actually love them. I think sometimes clients' expectations get skewed because of them, but bank statement loans. This is the simple, we're not getting into the nitty gritty here, just simple surface level. If you don't qualify based on your tax returns, we have programs, Zach and I both, you call either one of us. We have programs where you can give us 12 months business bank statements. We're simply going to count those deposits and we're going to total them all up. And we're going to use that as your annual income. We put it into a formula. It tells us what we can use. It factors in a default expense ratio. Then it gives credit based on your ownership percentage of the company. And that's your income. So if you have high receipt revenue going into your company, use 600,000. That's what I had a couple of months ago with a guy. 600,000, then that's $50,000 a month. You throw it into the formula and you don't use all 50, but by the time it's spit it out, he went from a debt ratio of 90 something percent to 30%. So he instantly became qualified. So again, surface level bank statement loans, ask us about them. They're great. They help. They can get you qualified. They can get you a house. They can get you cash out until it's time where you have filed enough on your returns to be able to do it through the traditional channels. So
I'm gonna circle back on the buyer expectation on bank statement loans. This is a higher risk loan.
yes,
Higher risk means
you're not
bigger down
entitled
payment.
to the loan. How about that?
Right. A higher down payment, higher interest rate. So there is a price to pay for going into a higher risk category.
Yep, 100%.
Yep.
All right, that'll do it for us. Thanks for hanging out with us. Great end of year episode, though. Great tips about bank statement loans, tax returns, tax bills, how to qualify. The information's on the internet, but send us a DM. We can do it in under 2 minutes. Appreciate you hanging out. That's season 2, episode 1, or episode 53, if you will, in the books. And we'll catch you next week. Take care.
Next time.